So in today's video, we'll be talking about tax shelters. What are they? How they can be used to minimize your tax liabilities and the taxation events that occur. When do you actually get taxed? So first off, what is a tax shelter? It is an arrangement to avoid or minimize taxes. And just note that this can be done legally. So we know that there are different entities and they all have different tax rates. So the name of the game is to use a combination of these different entities to reduce your overall tax liability. So people always come to us and ask, when should I set up a trust or when should I set up an SMSF? And I think it's really important when you start becoming a higher income earner and you start accumulating high net assets that you do look into these different entities to reduce your overall tax liability. Because we know if you save a substantial amount of money each year, that can be further invested in, those savings can compound over time. So yes, so in terms of understanding these different entities and how they can minimize your overall tax liabilities, with a discretionary trust, these tax shelters are maintained at the beneficiary level, which means the taxation event occurs when the beneficiary receives the income. So on a normal annual basis, the trust will earn or generate income. That income is then distributed to the different beneficiaries. And the unique thing with a discretionary trust, we can choose which beneficiaries will receive that net income and then hence control who gets taxed. And then that beneficiary is taxed at whatever tax rate is accessible to them. So if it's individual at their marginal tax rates, if it's to another company, then they are assessed at company tax rates. So just
The only
note
thing
that.
I'd add there, the only thing I'd add, Dave,
Yeah.
is it also depends on the list of beneficiaries that are in the trust deed. So you can't find someone or add someone to the trust specifically to distribute dividends to them if they're not part of the deed. So a lot of tax planning has to be done before the distributions happen to avoid that.
Yeah. So make sure that your trust is actually set up correctly in the beginning to future-proof, your ability to distribute this income in the future to the various beneficiaries. So how's that different with a company? So with a company, tax shelters on corporation profits are eliminated on distribution to shareholders. So what does that mean? Companies will generate income during the year and their profits are taxed at the company tax rate. So if it's a small business at 25%, and then the company will pay dividends out to its shareholders. And the shareholders will pay tax on the grossed up dividend. So that's where the tax paid on corporation profits are effectively eliminated or reversed. And then the shareholder will also receive a tax offset. So it might be a bit hard to understand without looking at the maths. And you might think, what's the purpose of having this arrangement? Well, without, I guess, showing you the numbers, just know that between the company and the shareholder, you still generally pay less tax overall because it's an average of the company tax rate and the marginal tax rates of, say, an individual. And you also can dictate the timing of that dividend that is ultimately paid. So unlike a trust where all the income generated within that year is distributed within that year, a company can choose to delay distribution of dividends in a future year, and hence you have more control to the timing event that occurs. So again, backtracking here, so just note there are two taxation events that occur here at the company level and here at the shareholder level. So definitely when you start using a combination of these entities, so perhaps this company is owned by a trust, you can kind of benefit from both these two different tax shelters. This is where tax planning comes into play and is really important in kind of managing your overall tax liabilities. So yeah, it can get complex. So if you have any more questions, feel free to reach out to the team. Thank you.